We begin with the Chinese economy. Profits at China's industrial firms unexpectedly shrank at the start of 2025, signaling more economic headwinds than anticipated as the country braces for a challenging year. According to official data from the National Bureau of Statistics, industrial profits fell 0.3% in the first 2 months of the year compared to the same period in 2024, reversing the brief rebound seen in December. Bloomberg Economics had projected a 9% year-on-year increase for the January-February period, making this contraction a significant and concerning deviation from expectations. Indeed, the decline is much worse than anticipated. Industrial and materials stocks fell at least 0.6% on Thursday morning, more than double the decline in the general CSI China Securities Index 300. The weaker earnings highlight the fragility of China's recovery, particularly as trade tensions with the United States intensify. President Donald Trump's looming tariffs could further dampen foreign demand for Chinese goods, adding to manufacturers' challenges. With external risks mounting, policymakers may need to accelerate stimulus efforts to stabilize industrial growth. Not everyone was surprised by the dip, however. Peking University finance professor Michael Pettis expressed, "For me, the surprise is not that profits fell, but rather that Bloomberg Economics had forecast a 9% year-on-year increase. I often speak with former students who run businesses in China, and they all complain of weak demand and falling revenues. Their concerns are echoed by former students in venture capital, who report the same thing. When supply growth outstrips demand growth to the extent that it does in China, it is hard to imagine businesses having much pricing power." This week, Chinese AI startup DeepSeek once again shook up the artificial intelligence industry with the quiet but powerful release of its latest model, DeepSeek V30324. Unlike the highly publicized launches of OpenAI and Anthropic, DeepSeek's newest model was released with minimal fanfare, a stark contrast to the Western AI company's marketing-heavy approach. The 685 billion parameter model, now available on Hugging Face, is setting new benchmarks in performance, particularly in coding and mathematics. AI researcher Xeon hailed it as the best non-reasoning model, surpassing OpenAI's Sonnet 3.5. Pushing Chinese AI model strategies, moving away from fundamental model training to focus on enterprise applications and industry-specific AI solutions. Internationally, DeepSeek's rise is intensifying competition with OpenAI and Google, both of which rely on premium-priced AI services. The model's impressive performance-to-cost ratio, allegedly built for a fraction of OpenAI's budget, though this claim is debated, has spurred a wave of cost-effective AI solutions, forcing U.S. tech giants to reassess their pricing strategies. U.S.-China, Chinese-built ships. The Trump administration's latest tariff proposal has sparked significant controversy in the global shipping industry, as the U.S. government considers imposing substantial fees on Chinese-built and Chinese-operated vessels docking at American ports. The U.S. Trade Representative (USTR) plan includes charges of up to $1.5 million per port call for vessels built in China and $1 million for those operated by Chinese companies. While the administration argues that this will curb China's dominance in global shipbuilding and promote American manufacturing, industry insiders warn that these fees could disrupt supply chains, increase costs for American consumers, and negatively impact U.S. businesses reliant on maritime trade. The president of the Chamber of Shipping of America questioned the feasibility of using collected fees to rebuild the U.S. shipping sector, emphasizing that the funds would be insufficient to restore an industry that has been in decline for decades. Duncan Wright, CEO of Ohio freight company UWL, warned that the proposed fees could devastate businesses relying on small Chinese-built ships, impacting trucking, dock workers, and other key logistics sectors. China controls approximately 70% of the global market for new container ship orders, with its state-owned enterprises receiving substantial government subsidies. The USTR argues that this dominance gives Beijing undue influence over global trade. However, critics argue that the U.S. lacks the infrastructure, workforce, and capacity to scale up ship production to meet domestic and international demand. Public hearings on the proposal are currently underway, with stakeholders from the shipping and trade industries weighing in on its potential consequences. As the industry braces for potential disruptions, Trump's push to make American shipping great again could reshape maritime trade and intensify geopolitical tensions in an already strained U.S.-China relationship. Huawei's EU bribery scandal. The unfolding bribery scandal involving Huawei and members of the European Parliament has intensified, with new details emerging about financial transactions allegedly approved by the company's senior executives. Reports from Follow the Money indicate that, according to an arrest warrant, Huawei's former vice president for the European region, Abraham Leo, endorsed money transfers meant to conceal bribery payments. The scandal centers on accusations that Huawei lobbyists funneled tens of thousands of euros to European Parliament members in exchange for political support. Belgian authorities recently raided the homes and offices of several parliamentary assistants and lobbyists suspected of facilitating these payments. A key figure in the probe, former parliamentary assistant-turned-lobbyist Valerio Ottati, is accused of orchestrating bribes via fraudulent invoices, channeling the funds through a Brussels-based event firm into Portuguese bank accounts before compensating European lawmakers. The alleged bribery was tied to a 2021 letter, signed by multiple parliamentarians, arguing against the exclusion of Huawei from the EU's 5G network infrastructure. The European Parliament has since revoked access for all Huawei representatives and pledged full cooperation with judicial authorities. Meanwhile, Huawei maintains its stance of zero tolerance for corruption but has declined further comment on the investigations. This case brings renewed scrutiny to ethics in the European Parliament, especially in the wake of the unresolved Qatargate scandal, where members were accused of accepting bribes from Qatar. As the investigation continues, authorities anticipate further developments, potentially widening the circle of suspects and increasing legal challenges for Huawei and implicated EU officials.